Welcome back, everyone. Just a quick sound check and then we can get started. So it's either going to be very quiet in the market today, this week, or it's going to get super busy, but we're going to get through that. Don't worry. Okay. Again, just a quick sound check and then we can get started. Sounds good. All right. So it's a really long delay on my side here. Okay, just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded again that past performance is not indicative of future performance. Alright, let's something move on the UK Open. Well, a lot of stuff it's moving. We did talk about the Euro USD and stuff like that. Hopefully you guys managed to get in on the Euro USD this week. But let's just jump in straight into, let me just talk about dollar index first, because this one here, it's going to be very interesting. Right now, this one has transitioned below the Ichimoku cloud, but it's not a confirmed thing as of yet. Again, candle still going to be open until... obviously until the US session ends. So with what the FOMC is going to say tonight, it might take a little bit of a turn. So on that assumption, we're taking a look at the dollar index. This one here has dipped down a little bit lower. That again, I'll bring up the VIX later on, but right now it is about 103. This is about 1 point below the supposed support on the dollar index. So we are looking at a little bit of a dollar softening here, but doesn't necessarily mean that, you know, it's kind of the end of the dollar run and stuff like that. We'll take a look at the other currencies later on, but let me just warn you. Just take a look at the currency correlation, and I can bring it up actually on the screen right now. So there's a little bit of currency correlation calculator. If you guys want to use it, it's on investing.com. If you want to, that would be the easiest. But take a look at the pound USD and the correlation with the euro USD, and take a look at the sterling yen. All of them are actually a little bit off, right? So the Aussie USD, Euro USD, Pound USD, they're not really positively correlated at this point in time, especially with the Aussie USD. This one here is way off. It's at 0.45. In terms of gold correlation, it is at 0.37, so it's practically neutral. Basically, there isn't any correlation at all with gold, the euro, the pound, the Aussie, right? So we are looking at a lot of this correlation being a little bit off today. So in that context, we basically need to take a look at every single currency as a separate individual thing without any correlation to one another at this point in time. Okay, so neither positive, neither negative. They're a little bit neutral at this point in time. So we're going to take a look at things independently. I'll bring up the VIX first. Okay, so we've got, the dollar index was on the weekly just now. Let me bring up the dollar index back again and show you the daily. The daily for the dollar index, it's basically still within the Ichimoku cloud again. So we're not really transitioning as of yet. For the dollar index, so this one here might actually bounce off 103. That's one sound warning for you guys. The VIX, I just want to show you the weekly VIX. So the past 2 weeks we have seen VIX increase. That's basically on the whole SVB, Signature Bank, Credit Suisse. For now, I can quite clearly say, because the VIX has dropped significantly, I think we have market confidence back. So we're not really looking at those risks aversion going on in the market. I don't think there's any run to safe haven, especially today. we have seen market confidence return. So for this week, the VIX has actually dropped significantly. It dropped all the way down from 29. Now it is at about 21.66. So in terms of volatility, in terms of systematic risk in the market, I think we are past that. Okay, so on Monday, I wasn't quite sure on what's going on with that, and digging a little bit deeper, and was looking at the write-off of that 17 billion of asset that was being written off from Credit Suisse on the UBS merger. I filled this in on the outlook, but just to give you guys an update on what's really going on, the 17 billion wipeout was actually a A1 bond, I believe, and that's basically a bond issued by Credit Suisse. So whoever bought that bond basically lost their money, and it's 17 billion worth. So it does impact the bond market a lot more. Take a look at the drop in yields and stuff like that. But that's basically that. We passed that at this point in time. With the VIX dropping down like this, we can safely say we are beyond that, unless there's anything new this week. At this point in time, we would assume that the whole thing has gone past, right? We're not looking at any contagions into the market. We're not really looking at any spillover. We're not looking at excessive fear in the market to drive anything ridiculously down. Okay, so with that in mind, let me bring your attention to the FOMC tonight. The FOMC will hike 25 basis points, and it will happen, right? That 25 basis points is going to happen. Whatever price in for a 50 basis points, that's not going to happen. We've got last week's CPI numbers that was down, right, to 6%. Core CPI was also down. We also have the PPI numbers that was down 1.2%. That's a significant drop in inflation, but the FOMC will still hike by 25 basis points. And there are a few things to note for tonight's FOMC rate decision. Probably you're gonna find out during the press conference, but I think the interest rate will stay higher for longer. I think that word is gonna basically be said by Powell, right? And also, we're not really too concerned about the hike, whether it's happening or not. It will happen, right? The FOMC doesn't have a reason not to hike it, because they will focus on inflation, price stability, number one, especially after what we saw from the UK, where inflation actually picked up again today. So FOMC will hike interest rate. That's a given. What we need to find out from tonight's meeting, it is actually not the rate decision itself, but it's actually the economic projection for the next 3 months. What we need to find out, it's whether or not they're going to increase their interest rate target rate. That's right now about 5.25. With the hike tonight, it will take it to 5%. So I doubt it will just be one more hike and then that's it. So I think the interest rate target is going to get adjusted. People were looking at, the consensus was a target of up to 5.5% until the next quarter before they start to adjust it. So if the FOMC projection comes in, the dot plan comes in, and the dot plan indicates anything higher than 5.5%, that means the FOMC is still hawkish, right? So we don't expect them to be hawkish at this point in time. We kind of expect them to tone it down a little bit. At least I expect them to tone it down a little bit. But yeah, a few things to note. It's not the interest rate hike that matters tonight. It's the economic projection. What we really want to see is what's written by the FOMC, what makes them decide on hiking interest rate by 25 basis points. What are the considerations? What are the considerations of what's been happening in the past 3 weeks? How does that impact future risks in the market? That's what we need to focus on for the FOMC tonight. It's the economic projection. It's not whether or not they're going to be hiking rates. So Don't ask me if they are going to be hiking rates tonight, because the answer is yes, they will be hiking rates tonight. In terms of the impact, whether that's going to be positive or negative for the US dollar, it doesn't matter. It's irrelevant at this point in time, because we need to focus on the economic projections. Okay? All right, so that's a little bit of just going on for the tonight. Morning, afternoon, obviously in the US. And then tomorrow we've got the Bank of England interest rate decision as well, after the headline inflation that was higher today. The Bank of England will also hike by 25 basis points, right? Up until last week, it was up in the air. It was about 50-50 whether or not they're going to be hiking, whether they're going to be pausing. They will hike because inflation is still above 10%. And I mentioned this in the outlook. It'll be interesting this week, because if inflation manages to drop down below 10%, then yes, it'll give reason for the Bank of England to not hike interest rate. But that's not the case. It went up. Core inflation went up. So they are going to hike interest rate by 25 basis points. And I'm pretty sure with Bailey, he's not going to give you any forward guidance. And they're basically just going to say, hey, it's up in the air, data dependent, blah, blah, blah. But the sense for tomorrow is that we are expecting a rate hike from Bank of England as well. Now, the in between that, before the Bank of England interest rate decision, there's going to be a Swiss National Bank interest rate decision. The expected consensus is for a hike from 1% to 1.5%. They will hike. I'm just not sure whether it's going to be 1.5%. They might only hike by 1.25% because of what's going on with UBS and Credit Suisse right now in Switzerland. All right, so that will be the consideration as well. So I'm not sure that they will follow through with 1.5%. A 0.5% hike tomorrow. I think they might go with 25 basis points. Okay. Let's take a look at the Aussie USD first. This is one of the first requests, obviously. So with the Aussie USD, this one, if we take a look at this one, it is still below 67. Right now, we're finding a little bit of a resistance at 67 cents. In a nutshell, it attempted to break 67 cents, but it's unable to do so. Now, if we take a look at the Kijun Sen, it has come down, right? Tenkan is actually flat at around 66.50. So we know for at least we have a little bit of a guidance, right? So let me clear this off. I'll just remove everything. And I'll squeeze down the stochastics and the RSI a little bit, because we want to focus a little bit on price for the Aussie USD. Aussie USD, we've got 66.50. That would be your immediate support to the downside for the Aussie USD. In terms of resistance, we've got 67. All right. And that's basically it. So I think for the Aussie USD, there's actually an opportunity for a short with Aussie USD at this point in time, because we have that rejection at 67 cents, and then we get rejected at the Ichimoku cloud as well. We are now below the Ichimoku cloud. Price has transitioned below the Tenkan Sen. There's a little bit of support on the hourly time frame on the Kijun Sen around 66.75, which is at about 50% retracement level. But this is actually a potentially good trade today. We had a close below 23.6% just now, and so if you're thinking of going short on the Aussie USD, I'm all in for that. In terms of stop loss placement, you got a few options, but I'll just give you a target. Target will be at 66.50. All right, because that's where the Kijun Sen is going to be. And I think we are going to go past 61.8 and 78.6%. We might see a little bit of support here, but that's still going to give you a great risk to reward ratio. It's not by much, in all honesty, because we're still trading within like a 50 pip range for the Aussie USD. So this trade is actually a risk that's not too big of a risk, right? You can have your stop loss at exactly at 67.02. That would give you about 15 pips stop loss. Or you can have it a little bit more, maybe about 25 pips, and that's still going to give you a great risk to reward ratio. All right. If you want it to be super safe, then you want to have your stop loss at 67.25. It will still give you a 1-to-1 risk to reward ratio. At least it will give you some room to avoid the potential whipsaws in the market. So this is a very quiet market for the Aussie USD, but I'm all in for a short on the Aussie USD at this point in time. In terms of support, in terms of target, don't target too far ahead, right? 66.50 would be your first target. Your second target, so I would actually do this. I'll create a little bit more of a tier projection, right? So the first one, you can go for that 66 cents, which is at about 161.8%, right? This is going to give you a great risk to reward ratio. The other one is that you can go short, have your stop loss a little bit lower, right? It doesn't have to be at 67.25, maybe about 67.10, right? And then in terms of target level, you could target 66.50. So it'll give you a two-tier trade, two different stop losses. So if you're thinking of opening a position, split that lot into two sizes. One with the stop loss that's a little bit higher at 67.25. The other one is at about 67.10, right? And just let it run, because it is a pretty minimal risk, as we're not really risking too much here on the Aussie USD. The potential for this one here for that pullback on the rejection of 67 cents. That's basically what we are eyeing for right now. We're looking at price rejections at 67 cents for the Aussie USD. So the Aussie USD, it's pretty easy to read at this point in time. Okay. We'll take a look at gold later on. Can you take a look at the Euro Yen? Yes. I got into a sell after I got rejected at 143 zone during the Asian session. Then I got bullish during this London session. Where's your stop loss? Because it shouldn't break 143, because anything above 143 is actually a pretty huge risk for the Euro Japanese Yen. That's kind of the limit that we do have for the Euro Japanese Yen. On the daily for the Euro Japanese Yen, we basically bounce off the Ichimoku cloud. We break above 143, so I think there's a lot of risk involved in this one if you're attempting to go short the Euro Japanese Yen. Just as a disclaimer, this week I've actually been long Euro USD, so this one here might be a little bit more of a problem if you went short on the Euro Yen. Where's your stop loss? That's the thing. We might pause a little bit because we are at about 143.50. We are at around 161.8% on the Euro Japanese Yen. But you need to know where your stop loss is. And for this one here, if you short it at 143, you've been stopped out. Okay. Okay. So don't attempt to go short on the Euro Japanese Yen. Short-term trend doesn't match a sell. It doesn't look like it's time for a sell on the Euro Japanese Yen. Let's not on the daily, and on the early time frame we are really strong to the upside. In fact, 143 would actually be the support for today. Any pullback towards 143 would actually be more of a buying opportunity that the market could be waiting for. So yeah, Euro Yen definitely not bearish, and if we take a look at the Kijun Sen and the Tenkan Sen, it's actually going up, so we'll actually probably flatten out at 143. So if you're looking at Euro Japanese Yen, if you're thinking what should I do with Euro Japanese Yen, do not go short Euro Japanese Yen. And if we take a look at the RSI itself, this is way strong. The trend is so strong that it actually bounces off 60 on the RSI. So it indicates a very strong uptrend on the Euro Japanese Yen, and I don't see this subsiding at this point in time, especially with the Euro USD. There's even a projected target at 1.0825, 1.0850 for the Euro USD. So that might lift the Euro Yen a little bit higher. Again, as I mentioned, with the VIX dropping down in terms of the whole banking crisis that's been going on, I don't think there's a spillover. I think market confidence has come back. I don't think there's a need to run towards safe haven. That's probably why you're looking at a weaker Japanese yen today. And that's why you see that recovery on the euro, Japanese yen, sterling yen, dollar yen, and stuff like that. Okay. So euro yen, pretty easy at this point in time. If you don't have a position, don't open the position. Don't attempt to go short. Don't attempt to go long, because you are going. If you're trying to go long right now, just because it breaks above 143, you should be getting out right now, because we are at 161.8%. We basically need a new retracement to happen. I doubt that retracement is actually going to happen, because in terms of support, you're going to look at buyers coming in at 142.50 to 143.50. So this is actually going to be an area where there's going to be a lot of demand for the euro Japanese yen. So be very careful with the euro Japanese yen. Mortgage demand increases again, but interest rates are rising. That's because housing prices are actually falling off, right? If you follow the housing sector, the housing price is actually coming down because of the interest rate. But let me explain a little bit. It's not going to create that subprime mortgage crisis thing that was causing the global financial crisis. This is also happening in Australia, so I know this for sure. All right. I got properties there, so I know property prices and stuff like that. Property prices have actually come down. The number of new mortgages are actually going up, even though with a higher interest rate, because housing prices are coming down. It still works out about the same. Rent prices are actually off the roof. That's kind of the opposite of the housing prices. But what has it got to do with the currency market? It's got zero correlation at this point in time. Okay, so euro yen, you got stopped out, but you still asked me anyway. I'm telling you right now, don't attempt to go short on this one here. It's going to be a huge risk if you attempt to go short on the euro yen, because on the other time frame we are looking at support 142.50, 143. I would consider them more of a buying opportunity rather than a shorting opportunity. All right. Let's review dollar yen on the daily time frame. As I mentioned on the outlook, if we transition above 132.50, and that's basically what it is, highlighted 2 bars, 20th of March to the 31st of March, this is mentioned in the outlook. If we got that transition above 132.50, this is on track for a move back towards 133.50 and then 134.50. Beyond 134.50, then we are looking at 137, 138. Are we going to have enough momentum for that bounce to happen? I think so, yes. We just need to clear off a little bit of a resistance. Intraday wise, I think we are quite good. If daily closes like this today, then tomorrow we are likely going to track a little bit higher. Again, as market confidence return and people are, kind of happy with the whole banking process, people are okay with what the government has done, and other banks helping other banks with liquidity. I think it's a great thing. Again, we've got the Dodd-Frank Act from 2008 that tested the banking system really stringently, right? And I think it's a different case from 2008. So as I always say, when the whole thing started, it's not a fair comparison compared to 2008. Anyway, dollar Japanese yen, confident with this one, 132.50. We're clearing off 132.50, and if tonight we actually clear off 133.50, that's going to give a much bigger boost to the market tomorrow. Stochastic is going to cross. We're going to see that recovery. We do have that recovery window between 20th of March until 31st of March. So this week and next week, that's basically the current window where the Ichimoku cloud is just a little bit flat. So we need to move as fast as possible away from 132.50. If we do that, we have that daily close above 133.50, then yes, I have a lot of confidence that we might actually see yen weakening this point in time. My concern this week was if there's any contagion, if there's any spillovers in terms of the banking system, or if other regional banks were failing. The first thing that we were looking at on Monday was actually First Republic. This was brought up on Monday's webinar, but it turns out to be okay. So I don't think there's any reason for a run to safe haven at this point in time. Obviously, because that happened, the yen is dropping off, and then you see gold dropping off as well, because once market starts calming down, then there isn't enough reason for that run, or that, run towards safe haven. All right. Will gold reach 2050? I can give you an answer right now. It's no. Nah. Nishan, you're looking way too far, man, for gold. We'll talk about gold later. All right, so that's the dollar Japanese yen. Your yen done. The pound on the hourly time frame. Is there a bearish divergence? The RSI doesn't have a divergence. The stochastics, I wouldn't classify this as a divergence at this point in time. It is a little bit too flat. Even if it does happen, I would consider it more of a class B. It's not really a perfect divergence at this point in time. But can it pull back down? Let me bring your attention to the pound USD on the daily time frame first. Okay, this was brought up on the outlook. Right, we have a little bit of a resistance at 1.23, and that's going to cap the market. If you take a look at the movement for the pound USD in the past 3 days, basically the whole week, look at what it's doing. It's basically moving between 1.22 to about 1.2275. And if I were to show you the weekly chart on this one here, we might see a little bit of a gain, but it is still going to be capped at 1.23, right? So it is just it is range bound between 1.22 1.23. We are going to take a look at 1.23 and assume that 1.23 is going to be our resistance for the short term, because that's basically what the 161.8% on the hourly time frame is. Therefore, this would put this in the same scenario as the Aussie USD, right? Because that is the same scenario as the Aussie USD. If you are trying to trade the pound USD, then I would say a short in pound USD is a lot better, but temper your expectations in terms of where you want to target this. Okay, so this is the bigger fibs, right? We have reached 161.8. We basically got to 1.23, right? So let me just take this away and show you something else. This is basically what happened this week. We're anticipating a little bit of a pullback. We managed to pull back towards 78.6%. Now, any pullback towards 78.6% means the retracement is deep, right? Because of that deep retracement, there's potential for the next one to be limited in terms of price movement. Can we now look at this as a new cycle on the pound USD? I'll zoom in, bear with me. But if you take a look at what it did happen just now, it basically narrowly closes below 23.6%. Now, take it how you want. Is this an opportunity to go short for the pound USD? You could take that as a potential short on the pound USD, but you need to have your stop loss slightly higher, above 1.23. Don't put this. The maximum stop loss that you should have is at about 1.2325. This is just in case for what's going to happen tonight. Now, in terms of potential pullbacks, in terms of target level, you are likely going to be looking at about 61.8% to about 78.6%, which is going to be about 1.22. So this is going to give you about 1-to-1 risk reward ratio. If you put your stop loss at 1.2325, you want to have this smaller, you can have it at about 30 pip of stop loss. And No, I wouldn't have it at 1.2297. At least you need 1.23. So you need to have that a little bit higher. All right, so your minimum stop loss you're going to be looking at safely, it's at about 45 pips to about 50 pips. If you want to attempt to go short on a pound USD, you could go short on a pound USD, but don't think that this is a trade that you can take immediately towards 1.2150 or 161.8. However, once we get past the Ichimoku cloud, once we transition below that 1.22 level, that's when you can adjust this to 1.2150 and then 1.21 as your potential target. So this is adjustable, right? You could have it at about 63 pips to about 116 pips or potentially 167.5 pips. So given the options, rather than staying still and not do anything, I much prefer a short on a pound USD at this point in time. The only one that I'm still looking at holding on long, it's probably the euro, but we'll take a look at the euro later on. So yeah, you guys might look at that as a bearish divergence. From the stochastics, it does show like a potential bearish divergence, a class A, but on the RSI, it doesn't show that. Nishan, SVB was like 3 weeks ago, man. How much of an impact? From what we know, it doesn't have much of an impact at this point in time. There were, I think last week was talk about, right? We talk about the SVB issues. We mentioned this about 2 weeks ago on the weekly outlook. So if you missed the weekly outlook, I think it's a great idea. If you guys didn't watch the Monday weekly outlook, you guys should watch that weekly outlook. We did talk about the SVB. In terms of how far the damage is, I think it's pretty much contained at this point in time. Does it have a huge impact on the market? It does causes a little bit of concern. But in terms of whether or not the market is fearful, I think the market is calm at this point in time. I think this one here has actually gone past. I don't think we are going to see the whole SVB issue snowballing into a much bigger problem. Reject 1.23. Yep, Wilvin, in agreement with you. I would take this trade as a short on a pound USD because it makes sense. The stop loss makes sense. The target level makes sense. And if you take a look at where I'm targeting it, I'm not really targeting it off away from the Ichimoku cloud too much at this point in time. Okay. A much better confirmation would happen when price moves below the Tenkan 10, but I think this is a potentially good entry for the pound USD. Any potential Powell will speak about banking system and all of that happened last week. 1000% he will talk about it. Right, it will be part of the FOMC decision. It will be part of their future economic projections for the next quarter. So it is going to be discussed. He will talk about it. He will mention it, and that's basically what we want to see tonight. We want to find out what is his view on the whole banking system. Right, he will say this. Okay, he will likely say the banking system is stable. We are financially stable because remember, they had that joint statement with the U.S. Treasury and the FDIC. Remember 2 weeks ago? All right, this was in the outlook 2 weeks ago. That was that joint statement. So we know he's going to talk about it and he's going to say that everything is going to be okay. The financial system is strong. The banking system is strong. Nothing much is going to happen because if anything happens, the FOMC is already providing liquidity to help out with the mini bailout for SVB and Signature Bank. So he will talk about it. 1000% guaranteed he will discuss it and he will. That's basically what we're looking out for tonight. We want to know what the FOMC stance is. We want to know what the FOMC's view is on the whole situation. We want to know how does that have an impact on whether or not the FOMC is going to have on future interest rate hikes. That's what it is for tonight. We want to know. I talk about SVB was there were news that around 196 banks could go in the same way. Well, we can talk about regional banks, lending banks, obviously, like First Republic. That could go that way, but we need to isolate the whole SVB situation because SVB has a different. They have a unique client portfolio, to put it simply, right? In terms of lending, they do lend up to startups. They lend to VCs, and we know we've got the whole VC winter throughout 2020. So yeah, interest rate goes up, easy money, unable to insure their deposit. We got deposit outflows coming out, and that's basically what's causing it. So yeah, that news that you read, look at the dates. It might not actually be this week. That could be one. It might actually be news that was like at least 2 weeks ago. But I'm just updating you on the recent stuff right now. At this point in time, I think we are past that. We're not really too concerned on any contagions at this point in time. Would I stay up late tonight waiting for the FOMC? I stay up late every night because that's when I work, right? I basically work throughout the whole UK sessions and the US sessions. Okay. Aussie USD reject at psychological level of 67. Can we short? Yes. Semarang, we did talk about this. Aussie USD is the first one that we talked about. Let me bring up the Aussie USD. So it's actually already on the way. So you got two. You're supposed to split this into two trades. One with a stop loss at 67.25. The other one at about 67.10. The first target 66.50. The second target is at 66.17. You want to go for 66, feel free, but we're just aiming for that 161.8% Fibonacci extension. So you already have two running trades, which is the Aussie USD and the Pound USD, and I haven't even discussed the Euro USD. I wouldn't stay away from the yen crosses, but it's a little bit too late to chase after the yen crosses. We had that on the Euro yen just now. All right, let me touch base a little bit on the Euro USD. Okay, the Euro USD for this week we had a little bit of a projection in terms of target that would actually be 1.08 and 1.0825. Now, do not place the Euro USD in the same boat as the Aussie USD and the Pound USD. They have basically the correlation is a little bit off. The correlation with the Aussie USD is at 0.45. It's way off. The Pound USD correlation is at about 0.75. Again, it's not above 80, so I don't see them as being positively correlated. You might think with the Euro USD, hey, there's a rejection at 1.08. We should go short the Euro USD. Do not attempt to go short Euro USD like how you did it with the Aussie USD and the Pound USD. It might go down, but the Euro USD is in a very unique position at this point in time because we have a really strong trend to the upside that has been consistent. We are still basing this on the 15th of March swing on the Euro USD. And if I were to draw a trend line, let me just change the color. Right? We got a pretty flat, nice trend line at about 24-25 degrees. This trend line is still going to be intact. The Ichimoku cloud is still going to be intact. The Kijun stand, for those that are not familiar with how this works, but if the Kijun stand flatten out and create more of a step, we are looking at a very consistent uptrend for the Euro USD. The move for the Euro USD might not be over yet. We might actually see a move towards 1.0825 at the very least on the Euro USD. So don't assume that there is a rejection at 1.08. If you're trading this on the 50 minutes time frame, then that's a different case. You can actually attempt to go short on the Euro USD on the 50 minutes time frame, but I'll be honest with you, it's not worth the risk. Okay, because right now, if we take a look at this one here, if you want to go short intraday, we are past 38.2%. In terms of target wise, we're looking at about 61.8%, 78.6%. You're going to be looking at support. So if I were to illustrate, if you want to go short right now, these are your potential target level. It's only at 61.8%. Risk reward ratio is less than 1. You're only able to go for that 10 pips. Do not go short Euro USD, right? You can go short Aussie USD, you can go short Pound USD. The Euro USD is at a different market condition than the Aussie USD and the Pound USD. It is situationally very different. Not that I'm just biased because I have a long position. My long position has already been closed out, half of it at 1.08. So it's pretty clear. But do not attempt to go short Euro USD. If you want to go long Euro USD, you're also a little bit too late for this one. You might actually see price come back down potentially towards 1.0760, 1.0775. You see any bounces off that, you might actually go long. You can have your stop loss below 1.0750, but do not go short Euro USD. Right now, the trend is just way too strong. In terms of positive correlation between the Pound USD on the Aussie USD, the correlation, it's a little bit off. Okay. All right. So we covered the currencies, and I think there's one for dollar. All right. Let me go through the questions. Pound, SVB. Talk about SVB. Yep. Dollar Canadian. Hidden bullish divergence, correct? On the hourly time frame. Let me check. There is no hidden bullish divergence on the dollar Canadian. Even if you go with the stochastics, all right, I wouldn't consider this a hidden bullish divergence. Number one, we're not really in an uptrend. So I wouldn't consider this a hidden bullish divergence on the dollar Canadian. Can the dollar Canadian go a little bit higher at this point in time? It's a little bit tough to call because technically we're still in a downtrend. All right, we're still creating a lower high on the dollar Canadian. This one here is a little bit flat. So would I treat it as a breakout strategy on the dollar Canadian? I would actually stay away from the dollar Canadian. I don't think it's really worth it. It's inside the Ichimoku cloud. In terms of the range that it's currently contained in, it's pretty small. It's only like less than 20 pips or so. So I don't think it's worth it. If price manages to break above 1.3725, then I would potentially consider going long on dollar Canadian. If it does break above 1.3725, you can have your stop loss maybe at 1.3690, a little bit lower. Yeah, about there. In terms of target level, don't go crazy on this one here because you got a lot of resistances building up on the dollar Canadian. All right, I don't like this. There's too much uncertainty on the dollar Canadian, and there is no hidden bullish divergence. What about the Fed effects on Nasdaq? That's the thing. We don't know. We don't know what the Fed's reaction or thoughts about the whole banking issues, right? That's basically what we need to know. How does the Fed going to affect the stock market if the Fed interest rate target doesn't get adjusted too far ahead? If the dot plan is at 5.4 or 5.5%, then everything is already priced into the market. That's not going to send any fear that the Fed is going to hike even higher. That's going to be a positive for the stock market. Okay. However, this is where it gets a little bit unique because we're not looking at something that's black and white. As I always say with the FOMC, it's all situational. And this one here for today, what we need to know is the dot plan. If the dot plan is not at 5.5%, if the dot plan is at 5.75% or potentially even 6%, that's going to send the stock market down. But if the FOMC say, hey, you know what? I think, we put too much stress into the whole financial system. We're gonna hike maybe two more times, or maybe one more time, and then we are going to pause because the inflation is now taking effect. Because that's basically what Lagarde has been saying this week. Their interest rate hikes, it's starting to take effect now, right? So that 6 months delay, it's happening right now. So the FOMC could say that. They could say, hey, yeah, you know what, that delay effect, we're looking at that delay effect right now. I think we can go easy, a little bit easy on the interest rate hike. That would stand the stock market up. Okay, that would send the stock market up. That would actually send the US dollar down, because then there are signs that the Fed, it's near its end of their interest rate hike cycle. Okay, so the dot plan matters a lot. The projection right now is at 5.5%, 5.4 to 5.5%. If this projection turns out to be higher, then yeah, it means Fed's intention is to hike rate and maintain a high interest rate for a longer period of time. That might send a little bit of a negative sentiment into the stock market. Okay. Hope 2000 crisis doesn't happen again. It will not happen. Nishan, I can assure you it will not happen. I was there 2008. I was there 2012 during the sovereign debt crisis as well. And when Greece collapsed, it's a completely different scenario. We're not looking at the same mess. We are looking at really isolated case at this point in time, right? So maybe I'll give you a little bit of a confident boost. I don't think 2008 happened. Whatever new crisis is going to happen is going to be new. It will not be as severe as 2008. Everything is in place to protect a lot of the financial system at this point in time from what they learned from 2008. Okay, so if I can give you that assurance, I don't think it will happen. But I'm liking the volatility right now. I like the volatility at this point in time. Really love it. Okay. All right. Any suggestions? I want to finish up the currencies first, and then we'll leave gold for last, because there's not really too much to talk about gold, really. Okay. Let's talk about Euro AUD, and is that cup and handle pattern on the pound USD, pound AUD? What? You want to ask for Euro AUD or pound AUD? Any suggestion on Euro AUD at this point in time? At this point in time on the Euro AUD, I would say with the Euro, it is still pretty strong in terms of retracement. I think we're pretty limited on retracement. We traced about 50%. At this point in time, I think for the Euro AUD, this one here might be on track for 78.6% at least to 1.6165. And in terms of resistance, we've got 1.62. So if you want to monitor Euro AUD, you might want to take a look at 1.62 as a potential resistance for the Euro AUD. Okay, pound AUD, is there a cup and handle on the pound AUD? Would I consider this a cup and handle? It's just not smooth. There's too much jagginess to even call this a cup and handle. So no, I would actually rule this out as a cup and handle. All right, let's move on to commodities. Let's talk gold. And again, this is also brought up in the weekly outlook. It's also great if you guys are reviewing the weekly outlook. Okay, so on the weekly outlook, what I mentioned was the 2000 level is a little bit unique. All right. We saw that rush last week on Friday. That takes it up nearly to 2000. We got the high 2000, I believe it was 2009 on gold on Monday. What I said was it was in a different scenario where there isn't a lot of orders placed at 2000. 2000 is a significant price level. It's a unique price level. It is unlike 1950 where we have that break above 1950. When 1950 breaks on Friday, a lot of the orders at 2000 was pretty much removed or adjusted, and people were actually taking profits at 2000. Now the pullback that we are looking at is not really because of profit taking. Profit taking obviously triggers a little bit of a pullback, right, from the resistance at 2000, but because there is no need to run for that safe haven on Monday, on Sunday we've got UBS merging, Credit Suisse merging with UBS, right? It's being absorbed by UBS. That kind of gives a little bit of a confidence back in the market that before things get worse, the SNB and FINMA basically forced the merger to happen. The merger, if you guys are trading stocks, you guys would know, and if you guys are in the banking sector, you would know that the talk between UBS and Credit Suisse merging, it's not something new. It's not really a surprise. The talk has actually been ongoing. It's just that both sides doesn't want to make that deal happen. So to sweeten up the deal for UBS to take over, to absorb Credit Suisse, that was that 17 billion write-off that I was mentioning at the beginning of the session. That's a tier A, I believe it's an A1 tier bond, they call it, right? That got written off. So whoever bought that bond basically lost their money. That's a good deal because UBS bought Credit Suisse just for $3 billion, which is really cheap. Okay. So, for gold, there is no run towards that safe haven at this point in time. For gold, the FOMC will still hike by 25 basis points because what the ECB has done last week, it will happen, right? Obviously, it hinges on whether or not the FOMC is going to continue to hike more, right? Again, it comes back to the dot plan. Right, the dot plan matrix, they call it. If the projection comes in a little bit higher, 5.5%, beyond 5.5%, that's actually going to send gold a lot lower, right? Technically, if we take a look at gold right now, again, I highlighted 21st to the 30th of March. The reason I highlight this is because the Ichimoku cloud, it's actually very thin. At below 1880, right? So we have seen a quick drop to the downside. We have seen a significant pullback on gold, and this could easily become overbought. It's not overbought yet, but it could. If it does happen, then we might expect a little bit of a pullback towards 1900 at this point in time. So do I see a run towards 2050 at this point in time? I don't. Because we got that rejection at 127.2 at the 2000 level. The reason why I don't go for that 2050 level, because that 2050 level, it was a spike that happened in 2022, and that's pretty much it. But if we level it out, right? If we level it out, flatten things out, nothing has actually exceeded 2000. So for 2050 to happen, there needs to be a close, at least a weekly close above 2000. But until that happens, I'm just not looking at that possibility at this point in time. We are a little bit way off from that. Now, if we take a look at this one on the hourly time frame, the hourly is already trading below the Ichimoku cloud. So let me zoom out a little bit so you guys can see it. It is below the Ichimoku cloud, and if we take a look at the stochastics, it has consistently shown a potential for a class A bearish divergence. This is the same thing that we saw with Bitcoin before it fell all the way down to 19,000. Although that bounce on Bitcoin was a little bit faster because of the whole banking issues. If there wasn't that banking issues, then I don't think we are looking at that recovery at this point in time. So gold, where's it gonna go? It is trading below 1950, right? You can actually trade a breakout on gold if you want to, because right now the range for gold is actually really small. you can actually create a rectangle on this one. So on the break, outside of the current range, then yeah, make your decision. And the probability points for a potential move to the downside much more than it is to the upside. Price is trading below the Kijun Sen. Kijun Sen is at 1950. Price is trading below the Tenkan Sen. What is the support that we have? It's at about 1935. So if there's a break below 1935, then yeah, you might actually want to consider a little bit of a short position. In terms of stop losses, you can have it at, and I do not have it anything more than 1950, because that you want to really limit your risks. You want to have your stop loss 1950. In terms of target level, you got a lot of options. You got 1920 up to 1900. What would be the potential buy setup for gold in the upcoming days? I'm not looking for a buy setup at this point in time for gold. Look, as the whole banking situation calms down, as market moves on, you know, it might sound recent to you guys, but it's not, because that joint statement was from the outlook last week, so it's technically been going on for 3 weeks. It might feel recent to you, but a lot of development has happened in the past 3 weeks. So yeah, as I say, with the VIX, it has gone down significantly. It takes away a lot of the potential systematic risk that's been going on in the market. All right, about WTI. If today's daily stocks close above 20, okay, loading up. Does it count as an overbought? Does it count as an overbought? Yes, it would count as an overbought. With the RSI, already have one February above 23.6. But is there any news for oil today? There is actually a lot of news for oil today. Let me bring it up. All right, we got oil stocks, crude oil. I believe we have got the. Yeah, there was actually a lot of news for oil today. Let me just find it. Pretty sure I read it. It's not the A57. Yes, in 2 hours time, no, in 1.5 hours time, there's going to be crude oil inventories for the US, and that's going to impact the market. The forecast was for a drop to negative 1.7 million. Previous one was 1.6 million, but crude oil inventories has actually been going up. Let me just see the last one that we have here. The last one last week was down, and then it was up. So yeah, if we do get a negative number on the crude oil inventories, then yes, we might actually see a little bit of a recovery on US oil intraday wise. Not intraday wise, that is on the daily scale. This one's already above 23.6%. This is actually coming off the overbought. It would be safer if the slow stochastics also comes off above 20, but you need to consider this. If you attempt to go long on oil, right, your stop loss, it's going to be at about 64, right? And your target level is likely going to be limited at about 61.8%. It's not going to be a great risk to reward ratio. You're looking at about $5.5 risk for a potential $4.7 risk. At this point in time, I don't think it's worth it for a swing position. You might want to consider a little bit more on a smaller scale, at least on the hourly time frame. But I don't trade oil on the hourly time frame, and position wise for oil, this one here I wouldn't take along, just because we are, you know, any pullback would still be considered a little bit more of a retracement rather than anything else. But if you're talking about this retracement and you want to trade that retracement, then yeah, by all means, I think we are looking at the same fibs. CEO and CFO of SVB sold their shares prior to a week of the collapse. In your point of view, is it genius? I don't know. Is it genius? I think it's genius. Oh, do they know something about it? I don't know. I'm not into any conspiracy stuff, but I know that it's under the control of the FDIC at this point in time. So it doesn't really matter. Not one to judge on what the CEO or the CFO does. Is it genius? If they can make money out of it, bloody hell, it's genius. Okay. All right, so we are on time for tonight. Again, guys, FOMC tonight, it's going to be a little bit different. We're not looking at anything black and white. We want to look at the economic projections. What is important, it's what's FOMC's view on the whole banking debacle, and what is their stance? Are they going to stick with fighting inflation, or are they going to go with, figuring out something to balance out financial stability? Right? So FOMC is actually tethering. It's actually, kind of in the middle at this point in time. We need to know which side they lean. Okay, do they want to focus more on the inflation side, or does the financial stability issue becomes a concern that could impact how they are going to decide on future interest rate hikes? All right. Okay, cool. Good luck with your trades. Don't forget to watch the Monday's Outlook, and I'll see you next week, I guess. Stay safe, guys.